Hello traders, Alla Peters, July 31st. It is 25 minutes before FOMC, the most important financial news of the month. This is S&P E-Mini future in front of you. This is Alpha Fibonacci scanner in front of you. This Alpha Fibonacci scanner right now giving multiple alerts on gold, not on S&P. Let's take a look on gold and see what's playing out before FOMC on gold, shall we? Here's more and more alerts on gold, as gold rallying before FOMC. 6 long trades in a progress on gold, not on FOMC, not on S&P. So this is a crucial mode right now on gold, started from ultimate support. What would be a major problem on gold next, as knowledgeable trader knows? This resistance. This is where gold will be struggling and showing powerful bearish pullback. So this is gold. Let's take a look on 1 minute chart so you can see where the alerts came from. Ultimate bottom. 6 alerts on gold, not one on S&P. Bullish push in a progress on gold, not on S&P. And that's what separates stress-free trading versus absolutely no trade now before FOMC on S&P. However, this is where S&P will be ideal before FOMC, this level. 3000 area, institutional trend inception, ultimate low, ultimate support, ultimate place to monitor for long. Exact same place where gold is rallying from now. This is the key. If S&P is not collapsing back down, if S&P remains in uptrend, mid-trend, this is key support. Not a pretty place to be. This is where S&P had been mid-trend for the last 20 plus hours. Ultimate place to be, not mid-trend, ultimate place to be, institutional trend inception. If I convert this chart to 3-minute chart, what would you see? Flawless bullish rally. No matter what chart you trade. That's the power of the method. That's yesterday morning. Stunning flawless open. This drastically higher while we are taking a break before FOMC. But there is no surprise whatsoever where market been rallying from. This is Fibonacci reversal zone, not the place you never short near, the place you monitor for bullish reversal from. Ultimate low, flawless place to be, 3000, ideal number. And if I convert this chart to 10 to 15, identical formula will remain. Rules are met by the bottom. And if you understand how crucial this institutional trend inception is, at the time of FOMC, it will be flawless place to be. This is where scanner can give 5, 6, 10, 15, 20 trade opportunities. This is where knowledgeable trader will be taking advantage with the help of a scanner at ultimate trend inception. And that's the difference between S&P now, where's no alerts as S&P stock mid-trend at key Fibonacci resistance, where we need S&P to collapse as low as possible, versus gold. There is no surprise. Gold heading higher. Multiple trades on gold. Not S&P, not yet. So if you're using this scanner, you have massive number of opportunities to choose from. Scanner right now giving me 9 alerts on gold, 0 on S&P. So if S&P collapsing as low as possible, it would be ideal. This is a reason why. This is institutional chart. Bullish rally that started in the month of June on daily reached ultimate resistance. This is the end of the minor trend. This is proprietary Fibonacci level. That's ultimate resistance before trend will head drastically higher. After this, drastically higher. But this is an obstacle. S&P been here for the last 2 weeks. Sellers are weak, buyers are tired. This is institutional chart. If you like to hold position for days, this is option traders' favorite chart. If you like to invest long term, this is S&P weekly, chart present in the room for years. This is sell-off 2018 and this is bullish rally from trend inception. This bullish rally struggling at the end of the minor trend, key Fibonacci resistance. More powerful the pullback, better off trader will be. Buying anywhere near here, near institutional resistance, is not a brilliant thing to do. But the fact that institutional bias remains long, brilliant thing to do to monitor to buy as low as possible. But by the time you come anywhere near here, you exiting your longs because you understand the importance of institutional resistance. That's the key. So when you day trade the method, buy as low as possible. With the help of a scanner, 3000 number is ultimate place to be. If S&P skyrockets to here, this is a place you're monitoring for short from. This is a place you're monitoring for short from. This is a place you're monitoring for short from. However, if you're understanding institutional bias, you look to buy as low as possible. You do not short against institutions ever. And while we're waiting on S&P, let's take a look what played out before on S&P years prior. So you can see the power and accuracy of the method as key targets, key trend inception, key trend reversal, always identified in advance. In day trading, minutes, hours, and day in position trading, days, weeks, months, and years in advance. Here's S&P in bearish correction 2014, 15, 16. As you can see, 1800 number is key Fibonacci support. What else do you see ahead? 2800 number is reversal zone. 1800 number monthly support is trend inception on weekly. This is S&P 10 months later. At key Fibonacci resistance, what do you see next? 2300 with 2500 to follow. That's exactly what S&P did. Night of the election, flawless bullish entries. Price skyrocketing to next level. Just taking many months to do so. Again, next target identified months in advance. What do you see next? Fibonacci reversal zone. Are you surprised that price is heading higher? Of course not. Please pay attention to the importance of this number. 2300 is key in 2019. When price is reaching Fibonacci reversal zone, as spelled out years in advance at 2800 number, that's when bearish correction playing out. Market selling off. What do you see at the bottom? 2300. Famous green level. Exact same significance as famous green level on monthly in bearish correction 2014, 15, 16. Do you remember this? Except 3 years later, it's no longer 1800. It is 2300. That's the key. This is where S&P struggled the entire 2018. 2600, 2500, 2300, trend inception. Trend inception at 2300 is where S&P rolling from in December 2018, which will be exact same trend inception at 3000 today at the time of FOMC. So when S&P reaches trend inception at 2300, no one's surprised where buyers coming from, correct? All in advance, never, ever after the fact. And that's the power of the method. And that's exact same trend inception that you will see on charts 1 minute and higher. Identical Fibonacci levels, identical trend inception as played out yesterday at institutional support. What is the difference between the two? This is day trading trend inception. This is institutional rally. There is no surprise where it came from. All in advance, never after the fact. And that's the power of the method. And that's the ideal place to be. As a day trader who day trades with institutions, this is the easy part. This is when you have 10, 15, 20, 30, 40, 50 trades per day. This is not. This is a problem. When institutions holding positions, when price stuck at institutional resistance, institutions can afford to buy extremely high. Day trader tested to the core. So when price collapses to ultimate trend inception, it's a gift. Identical formula applies, no matter what you trade. And that's where we would like for S&P to be. Ultimate low, ultimate trend inception. And it doesn't matter if you trade 1 minute, 3 minute, 5 minute, doesn't matter if you trade range chart, exact same formula applies. Rules are met, take a trade. With the help of a scanner, it's stress-free trading. Buy as low as possible with institutions, not against them. And that's ideal place to be at the time of FOMC. Mid-trend is a problem. Mid-trend when knowledgeable trader not wasting his time. If market not crushing, not pulling back, Not a pretty place to be. So, lower the pullback, more interesting markets will be right after FOMC, never before. We will allow price to settle down, and when scanners start giving us multiple number of alerts, knowledgeable trader chooses the best trade with best ratios, with best targets. That's the key. Every single trade based on precise entry, precise stop, precise target. Every single price action chart will have different stop, different target. Trade on 5 will have different stop and target than trade on 15 range chart. Trade on 21 will have a different stop and target than trade on 1 minute chart. Nothing in the method is random. Everything precise, everything to the tick. So, price collapsing as low as possible is the key. Few minutes to FOMC. So exact same concept applies to any instrument you choose to trade. We have 6 more minutes before FOMC. Let's walk down memory lane on Apple. This is Apple 2016. I presented hedge fund conventions that I do not care about horrific earnings that Apple had. Worst earnings in 13 years. What do I care about? I care about Fibonacci support. I say if this support is respected, Apple will head higher. That's exactly what Apple had done, doubled in value. Only obstacle remains the end of the minor trend. And this is where Apple head next level after earnings. What do you see ahead? Reversal zone. Are you surprised? Apple selling off should not be. Fibonacci said so. All in advance. Never after the fact. So when Apple in free fall, what do you see at the bottom? 141? Do not be surprised where Apple rallies from. As expected, ultimate bottom is a place to buy. And that's Apple now. Exact same place where we would like S&P to be. If you can trade one, you can trade them all. All in advance, never after the fact. Here is Apple now. So here's Apple traders. Ultimate trend inception. Apple right now at ultimate reversal zone. Knowing what to do with your position is the key. Chart present in the room for years. Apple collapsed from reversal zone multiple times. And that's where knowledge kicks in. And that's where knowledge is the key. Buy ultimate low, sell ultimate high, only when rules are met. And that's identical place where we would like S&P to be. If S&P is going to be stuck here, that's a problem. That's the middle of the trend. This will be your range. Not a pretty place to be. Mid-trend. Nothing in common between flawless trend inception versus mid-trend. FOMC in 3 minutes. We know extremely well in advance what we're interested in. Ultimate trend inception. As low as possible or as high as possible. This is the key. This is ideal. So I am converting chart to 1 minute so you can see to the tick the accuracy of the method. Mid-trend, we are not interested so much. We're interested in the bottom. But this is exact same key support as you saw on S&P monthly, as you saw on Apple weekly. It's all exactly the same. The only difference, risk management and trader psychology. Do you want to hold position for months and years? Or do you want to day trade? Choice is yours. So here we go, this key support respected, just like on monthly. Again, traders, we are in the middle of the trend. We know extremely well this is a range before FOMC, correct? Here we go. Any second now, FOMC. Shock or not, did we know or did we know that this would be the range? Of course, to the tick, boom. Key Fibonacci resistance. This is what the method is known for. Everyone clear on this? Not the place to buy S&P. So this phenomenal spikes back and forth is a stunning reminder. Do not be greedy, do not be trigger happy cowboy. Allow price to settle down. Rates are cut as expected. This was announced before, correct? Very good news. Would be even better news if S&P at the bottom. Slightly lower, pretty please, you can do so. Stunning reminder. You know Fibonacci levels, you know everything in advance. Never ever ever after the fact. Shock or not. The end of the minor trend, not the place to buy. So pretty please, never throw trades into the market. Obey the rules and take a trade. 1 minute after FOMC. We allow on average 3 minutes after FOMC to allow market to settle down. And that's the key. Right now S&P in flawless place. 3000 is ideal. That's where we would like to be. Ultimate institutional trend inception. So this is a stunning lesson, extremely positive news, but key Fibonacci resistance present. We knew extremely well this is not the place to buy S&P. Correct? No bullish move yet. None are present. We are on standby. 3000 is ideal place to be. So here we go, shock or not, did we know or did we know that this is not the place to short near? Of course. So this is where a knowledgeable trader starts being excited. This is ultimate bottom, where S&P weekly rallied from, where Apple weekly rallied from. But nothing yet, it's not a meaningful structure, it's meaningless. No reason to pull a trigger yet. So here we go, traders. So market moving extremely fast. I cannot even say a word. Market is rallying. I have massive number of trades. But market moving so fast, I don't have enough time to bring the trade to the trading room. Look where gold is now. All the long alerts. Well before FOMC. Shock or not. Bullish rally in a progress. Came from ultimate bottom. So this was key Fibonacci resistance on Apple for 6 months. This was a range. This is exact same level that's causing a problem on S&P this morning. Showing weakness of the buyers. The end of the minor trend showing not the place to buy. And this was exact same level on S&P weekly. 2016 is a problem. Taking 7 months to break through until next level. This is the key. Now, this is a problem. Just like on S&P weekly, just like on Apple weekly. So when S&P keeps rallying from Fibonacci reversal zone, you are not surprised, as we discussed, not the place to ever short near. Present in the room for the last week in a play to the tick. Ultimate trend inception is a power of the method. This is a key. This is a statement from student who is making an effort. After trying for 20 years, starting with 25K account until about 125, trading maximum 2 hours per day. Absolute maximum. That's maximum work week of 10 hours. And that's community of traders supporting each other. And that's the key. So Brett can make an effort, so can you. Has market been testing us to the core? Everyone clear on that? We've been stuck. Let's go back to 1 so you can see. What a chop! What a nasty junk! We knew that extremely well. This is a problem. There is no reason to buy, was there? Not near this level. So if S&P finally collapsing to 3,000, it's a beautiful news. As knowledgeable trader knew extremely well, there was nothing good happening here for the last 30 minutes. So, massive number of alerts again and again on S&P and gold. Are you surprised where S&P is rallying from? Ultimate bottom. But respecting this level as your key target and moving your stop outside of break-even is the key. There was absolutely no long and 3,000, none were present. If you choose to ignore this reversal zone right now on your trade, price can collapse completely again. 20-30 points in a matter of blink. Because when your trade reaches this area, your stop well outside of break-even and profits off the table. There is no surprise. Why price pulling back now? So price collapsing right now again all the way to the bottom. Knowledgeable trader walking away in profit. Knowledgeable trader operates as sniper, never ever ever throwing random trades into the market. The long is not on 1 minute, long converted on 1 minute on purpose. So you can see ultimate precision and ultimate accuracy. Reversal zone, where knowledgeable trader exiting long. So when price stages bullish push for 20 points in a matter of seconds, there is no surprise where it came from. Institutional support as expected. And if price collapsing right now again, another 20 points, it's a beautiful news. Because it means more and more trading opportunities will be present. Since we've been here, 15 plus alerts on gold. Only 3 on S&P. Extreme volatility is a stunning reminder. Knowledge is power. I can speak only so fast in these volatile market conditions. We agree? Hand-holding never a recipe for success. Knowledge with the help of a scanner. Stress-free trading. More and more signals on S&P and gold, but my goodness, knowledgeable trader takes advantage of this stress-free trading. Number of alerts between S&P and gold 20 plus. Everyone clear on that? Knowledgeable trader knows and applies the method. So when you come to the website, one of the best sources of information is our YouTube channel. If you click on YouTube channel and you go to YouTube channel, we are at almost 2,900 members with 1,500 plus videos. This is where you can witness the accuracy of the method going back 10 years. From complete beginner trader to hedge fund manager method traded in US and globally. If you would like to see performance of one of our legends, pretty please view this video. If you would like to join us in the course and you would like to understand more about the method, simply click on About Us and view Webinar About Method. 4 courses are offered with and without software. More and more software and strategies developed. Currently 4 in the works, always available to graduates first. Proprietary Fibonacci Method, proprietary Fibonacci software, traded in US and globally from beginner to hedge fund manager. NinjaTrader 8 is a free platform. You can utilize software and scan on Ninja 8, but you can place trades on Thinkorswim, on Fidelity, on any platform you choose. All classes are live and recorded. Group classes 12 weeks, private mentoring 6. At this point, private mentoring is being booked all the way into next year. So if you would like to sign up for private mentoring, pretty please speak with me first. The other very important part on website, what students trade and what students say. Listen to students' podcasts. Again, from beginner to hedge fund manager. View the videos. Because if complete beginner traders can do it, so can you. So can anyone. Ultimate precision applies. And method only gets better, no matter what you trade. It is that simple. This remains a little problem. There is no surprise. This was a major problem, the end of the minor trend. But as we discussed with students, lower the price collapse, better off longs will be. The only problem that remains on S&P, as you witnessed on 1-minute chart this morning, this institutional resistance on daily is a problem. This institutional resistance on weekly is a problem. Identified months and years in advance. Exact same thing as you saw on 1-minute chart. So, if day trading not your cup of tea, use everything you learned for long-term investment decisions. Identical accuracy applies. And that's the reason knowledgeable trader right now not a pulling trigger randomly. This is what we're watching very, very carefully. And if price collapsing all the way back down, it's a gift. This level been present in the room for days. Always identified in advance. Never, ever, ever after the fact. Just like on Apple weekly. Just like on S&P weekly. Except in day trading you see it instantly to the tick. And that's the power and accuracy of the method, even during the most volatile event in the markets. So if you know where to exit your trade, you are in excellent shape. If you know where your stop is, you are in excellent shape. If you're trading with precision and sniper's mentality, you have zero problems. You're enjoying this game. All you have to do, play by the rules. And when scanner give you alert, take a trade. And when not, do not touch the market. All you have to do, choose the best trade. It is that simple. Buy the bottom, sell the top. Do not touch the middle. Do not touch exhausted trend that giving you nothing. As you're witnessing right now, and the price will remain stuck at this resistance for the remainder of the day, nothing else will happen here. Price is stuck. Walk away. your workday is over. You only need one. That's the quality in trading. Simply add the lot size, not a number of trades. So, we have community of incredible traders, from beginner to hedge fund manager, traders who care about one another. And that's the power of the method. Trade it in US and globally. If Brad can do this, so can you. Simply make an effort. And if you start with the core of the method, you will be invited to graduate events, where you will learn latest and greatest strategies, which I develop every single year. So the strategy next year will be even better than the strategy I work on now, because knowledge of this market puzzle never ends. Market is flawless. We are not, as you saw during even the most volatile event of the month. So pretty please, if you would like to join us, the only thing I'm asking you to do, review the information on the website and do not hesitate to contact me. Simply click on Contact Us page and call or email me. I always look forward to speaking with you. Thank you, traders.